The stock of the day is brought to you by IG, Australia's #1 CFD provider. With over 17,000 markets and extended trading hours, turn US earnings season volatility into opportunity. Get started at IG.com.
Welcome to the stock of the day on this Thursday, and we are in the thick of U.S. reporting season, so it's really hard to look past some of these U.S. behemoths, which I know many Aussie investors are interested in or invested in. The stock of the day today is Microsoft. After its shares rose 7% in extended trading, sales at its Azure cloud computing business beat expectation, surpassing $75 billion on an annual basis. Overall, revenue rose 18%. It is, some believe, a leader in the AI revolution. In fact, the team at Wedbush Securities saying that the leader has struck again robust guidance. It's lifted its price target off the back of this result. Eye-popping cloud and AI strength, according to the analysts there, with strong guidance to start FY26. It reckons it's in the $4 trillion market cap club. Mark Gardner from MPC Markets and Mark Moreland from Value 3 are here with me to give you their view on Microsoft. So is Microsoft emerging, not just as a cloud winner, clearly we know that, but as an AI force to be reckoned with?
Definitely. I think what Satya did with, he committed very, very early in buying up all the NVIDIA terminals, and big. He went big, fast, whereas a lot of the others were caught holding, sucking their thumbs, and then, of course, they then, we need to do this too, and then they go, sorry, I've bought them all. So now what he's done is they're now converting that into revenue. So they've got a real march on the market. I mean, the other cloud providers are doing well as well, but Microsoft really has jumped up. I think it's under the new management. Before it was, became super woke. I think that's slowly reversing. And when I say woke, I mean my son-in-law worked there. He was a senior engineer. He ended up leaving. He couldn't stand it because it was all focused about what you say, what you don't. Nothing about the business. It was really crazy. I looked at it in those days and recommended he sold all his shares, which he did, which with hindsight now was bad advice.
Okay.
Because even these big companies that have got such momentum, often they can do all sorts of stupid stuff and so on, and it doesn't make any difference because the amount of revenue that's coming in from all the Microsoft products and industry and so on is an incredible cash flow machine. The business is doing really, really well. I think, what else can I tell you? From a risk point of view, one of the big things that's coming out which might affect them is their OpenAI deal, because they went in heavily with OpenAI, which they saw as giving them a really strong strategic advantage in the LLMs against the others. Now that OpenAI, Sam Altman's shifting to a public benefit corp, which is like a non-profit, after Musk was suing him. Anyway, long story, but bottom line is it triggers that Microsoft will go from 20% equity in OpenAI to 49%, but there's a clause in there that says as soon as OpenAI gets to AGI, general intelligence, it strips out Microsoft's ability to access the results for anything. So in other words, they're going to own 49% of this thing, and as soon as it gets to AGI, and we're now thinking that's sooner than we thought, so who knows how long, but it might be a year, 2 years, 5, whatever it is, and then Microsoft won't be able to use it. So there's a big bun fight potentially happening there. So that's a bit of a cloud on Microsoft. They've got rid of 15,000 jobs, and then they said another 2,000 for underperformers. So you assume 15,000 they decided to be replaced by AI, and 2,000 underperformers, which would be a regular thing for them. And they stood up 2 gigawatts of new data centers in the last 12 months. 2 gigawatts power. That is massive in the last 12 months. And Copilot's now got, which is their AI product, has over 100 million active paying monthly users. So they're going very, very well, and it's a money machine.
Okay, so that's a buy?
I'd say it's a buy on. I wouldn't buy it now because it's just had a big run up, but I think you could absolutely add to it on whenever it gets weak. You could build a position in it.
Buy on weakness, Mark.
Yeah, further to Mark's point, like that. Yeah, it's sort of coming out of being a bit of a snoozing dinosaur for a while, and I think yesterday in the CRB I said it's based on the last sort of 5 or 6 years, it was sitting at an expensive PE, and they just smashed it. And I was a little bit concerned leading in, but the 75 billion for Azure, that's the first time they've actually quoted that number as in their reporting as a singular. So And they reckon there's going to be 37% growth next quarter.
Yeah.
And and you go back and look, there was a bit of, when they did go really hard really early. I think Sam Altman's going to end up being a footnote in AI in a few years' time. I don't think that Microsoft's been around a long time and they're very savvy. There's no way that's a mistake that they would have about 4 or 5 dogs in this race.
Yeah.
But Sam Altman was lucky enough to firstly be disingenuous that it was open source and then go and sell it to Microsoft. But it was first movers advantage. That's all Microsoft has paid for. And I think they would have broader plans to hedge against that, because Microsoft doesn't do a deal like that and pay through the nose to then lose it when it hits an AGI point. So I'd say spec buy at the moment, just with momentum, because I like Microsoft's back sort of vibe, because I've sort of changed my view having a look at it. The new management has made all the right moves. They went, and it was pretty risky to go as hard as they did, as early as they did, and it's just paying off beautifully now. So I think this is a bit of a new Microsoft. I mean,
it's got its mojo back.
It's got it. Yeah, that's probably the best way to put it. So I would obviously, you'd like to buy it cheaper, but I think you probably need to move up where the PE range has been, or forward PE ranges have been for the last 5 years. I think you just need to adjust that up now, because I don't think it's going to be cheap anymore.
Earnings are going up.
Well,
he actually said though that they could actually increase it a lot faster if they could get the compute, which they can't. So in other words, they're still saying the market demands are far greater than what they can deliver.
And they're spending big on quantum as well. So there was a side announcement after that, after the earnings today. But it's super impressive. And I think they're 80% of Fortune 500 are all on Azure AI Foundry. So that, like Microsoft 365 or Microsoft Office business model base that just ties people in and locks them in forever. They've done that first movers advantage. They've done that to 80% of the Fortune 500. Yeah. So earnings are not dropping off anytime soon. No. So
Interesting, a little fact I found out on that is that if you look at all the big companies, they actually don't have all their eggs in one basket. They deliberately. So Microsoft has 80%, but of those 80%, all of them probably have a certain amount of either Google Cloud or whatever, so they hedge their bets. They don't put it all in one, but they're absolutely dominating because of their position at the moment.
Okay, so it's a specky buy from MPC Markets and a buy on weakness from Value 3. That's the stock of the day, being Microsoft.
Okay.
The stock of the day was brought to you by IG. Turn volatility into opportunity this US earnings season with extended trading hours on over 110 key US shares. Get started at IG.com.